Good morning, traders and investors. Hello, YouTube land and pre-market prep fans and friends and family. Coming to you on Thursday, March 26, 2026. Yes, Joel is away still. He's away the rest of the week. You know what happens to the market when Joel is away, and we're seeing that here today. Futures trading down about 1%. Triple D and I will, of course, give you, as per usual, the last few weeks, the overnight update on any updates from the conflict in the Middle East. Excitement in SpaceX, related to SpaceX, continuing. We got a few more tickers for you here today. Triple D doing some good research on funds, ETFs, securities, instruments that may have some exposure to SpaceX. Hardware hit on Google's Turbo Quant product that they unveiled a few days ago. We kind of had this realization, like sort of as pre-market prep was happening yesterday. It was kind of after we jumped off air and went over to STN that we sort of realized this is like the first hardware AI disruption. We'll get into that a little bit more, figure out some implications there. Heads up at 8:30 a.m. We do get jobless claims. Few ratings here today that we'll go over later in the show. Our guest, our special guest today, a regular in the STN room. Glad to be getting him on pre-market prep here this morning. Tommy Lackey from Relativity Capital, one of our favorites, folks. Let's get it going here on this morning's pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Did I sound like Joel right there? We have SPY trading down about 0.9%, about 1% or so. Take a quick look at the Qs, which are trading down. Make sure my trade station here has the quote. Qs trading down about 1%. Let's take a quick look over at crude oil trading down. Trading up about 4%. Take a quick look at gold and silver here this morning. Quite a move in silver this morning. Gold trading down about 2.5 or 3%, while silver and the SLV trading down, I think it was like 6 or 7% earlier. Yes. Take a quick look at IBIT, and maybe we'll do a little TLT look real quick here. Bitcoin just recently, over the last hour or so, couple hours, moving under the 70,000 level, down about 2.33%. And here's a look at TLT. We haven't looked at TLT in a little bit. TLT trading down almost 1% here this morning. These charts, folks, brought to you by TradeStation, born to trade. Chart, analyze, customize, all in one platform on TradeStation. We are excited to see where we can go with TradeStation, get you using this platform and some of these charts a little bit more. Let's bring in the man of the hour, Triple D Trader. How's your morning?
I love the one chart system. I've always been about the one chart system. I come on here and I'm just happy seeing the one clean TradeStation chart. Makes my day. Some software issues this morning here with my trading platform, trying to resolve those. That's always fun. But, overall, it's another day where the Bears are winning. And I mean, we just keep seeing this story again and again and again, is every rep is being sold. Now, does that change, if we actually get a ceasefire? I think so. But, so far, not so good here, because obviously, yesterday we had the big pop. Trump and the White House proposing I think it was a 15-step process to getting this ceasefire. It sounds like Iran is rejecting this. It also sounds this morning like Trump is getting a little bit angry. Somebody said, well, he woke up this morning and the S&P futures were red, so he woke up angry. But he's had multiple truths this morning. One is attacking NATO again. Two is, and you may have a few of these, Brentster, I'm not sure if you do.
Yep.
Excellent work. We'll bring the truce right up here. The Iranian negotiators are very different and strange. They are begging us to make a deal, which they should be doing since they have been militarily obliterated with zero chance of a comeback. And yet they publicly state that they are only looking at our proposal wrong. They better get serious soon before it is too late, because once that happens, there is no turning back and it won't be pretty. This is escalation. This is a threat.
Yes.
So what, you've just got to read as the algos are reading the true social posts: escalation or de-escalation. Escalation, sell; de-escalation, buy. This post is undoubtedly escalation this morning. This is why the S&P futures are selling off. This is why the USO is rallying here. So again, we don't know where, the details. It's good that Trump wants to make a deal. Sounds like Iran isn't ready to make a deal. They got the Strait still closed. That's keeping oil prices elevated. That's got the market nervous. But there was other things happening yesterday too. And I mean, we can keep going on, and we know this is very important, the war, for the short term. For the long term, there's a bigger thing happening here. And we talked about this in the STN room, and I want to take it to the Google TurboQuant. Okay. So we broke this down. We mentioned it in the pre-market prep show, but then we had a chance to really break it down and research it in the Stock Trader Network think tank. And what this is, it's exactly what we said at PMP. It's going to use less memory. So if Google finds a way that they don't need as much memory here, that's not good for Micron. That's not good for SanDisk. That's not good for Western Digi. That's not good for STX. So what we said, and I tweeted it out, did Google just give us our first disruption in hardware? I believe they did. I believe they did. And that isn't something we haven't seen yet. We've seen lots of potential software disruption from Anthropic, obviously from Gemini, ChatGPT, OpenAI, software disruptions across the board. We have not had any disruption in hardware. We got one yesterday. That's what it is, a hardware disruption. Now, is it huge? No. But is it an issue? Maybe. So obviously Micron is sold off substantially. We also proposed in the STN room that maybe they start hitting other hardware stocks on this. We know the optical names have been flying. So I know Barad had a fantastic trade because I said, I think light is a sell here. I said this yesterday in the STN think tank. If you subscribe, you have that information. Stock was 805. It's down to 755 one day later. So does this mean, hardware, the story is over? No, but it's a risk factor. And I've been saying in the long-term portfolio, I've been adding hardware stocks. This spooked me yesterday. I'm also of the opinion, this is all opinions, not factual, all my opinion, but I've been in the markets 27 years. And I can kind of put pieces of the puzzle together here. I've been saying I would like to own hardware and energy in my long-term portfolio. Well, now all of a sudden we just got a hardware disruption.
Uh-oh.
So I don't know what that means going forward for the hardware stocks. Is this an issue? Or is hardware going to get more efficient? Maybe. So memory gets disrupted. Can optical disc gets disrupted? Well, the market is saying maybe, selling off a little bit there. Can some of these other hardware names get disrupted? Hasn't spread. I don't know. That's still to be determined. But, yesterday spooked me. I think AI, obviously disrupting software, appears to maybe going to eventually be disrupting hardware too. I think AI eventually disrupts everything. I think everything gets disrupted eventually. Gene Munster on CNBC yesterday said he sees next year the unemployment rate going up to 10 to 15%. I think that's conservative.
I think so.
It's conservative.
Yeah.
There's going to be massive job losses here. Again, government regulation could change that. If we start seeing job losses, do they try to regulate AI? Maybe. That's going to be a hard thing to put the genie back in the bottle, though. So there's lots of things to be concerned about in this market besides the war. The S&P's sitting down here near the lows has been very resilient, down 5.5% or something from the highs. Not much. Holding up well. A lot of individual stocks down significantly. Mag 7, all of them are down 12% plus, every single one. Down over 12% from the highs, with Microsoft leading the charge. I think it's down over 30% from the highs. So what do we do now? I don't know from a long-term perspective. I don't know where we're going, and nobody does know where we're going. AI could be the best thing ever or the worst thing ever. That's where the market's at. Uncertainty is everywhere.
In the realm of tech disruption, we've seen more than a few cycles of tech disruption in the last 25, 30 years. Software disruption happens first in these cycles, and then hardware. So we were following along with that here with this maybe bit of a realization yesterday that yes, AI can even disrupt hardware if we're talking about making efficiencies. And Dennis, when we were looking around for other ideas after we kind of had this realization yesterday, I was like just clicking through some tickers
Sure.
and looking at the charts, and you were like, no, this has not performed well enough. We need high flyers. And the optical names are like some of the highest high flyers right now. So I think that yes, there are concerns, like data centers kind of thing in this way, but also keep in mind that the optical names were very strong. They were maybe like the trendiest
Oh
subgroup
yeah.
recently. And I asked you, Dennis, just to kind of express the bounds of this line of thinking. We looked in the opticals, and then I was like, okay, well, what about like a Nebius or like a Core Weave? And you're like, I think that's a stretch
They're okay for
here
now.
right now. Yeah, exactly.
But I thought hardware was okay last week here too, and now I'm scared. Now this was a minor disruption. This isn't like Micron saying this the party is over, but it's notable, and the market noted it yesterday because they sold those stocks off on it. I just think there's a lot of things happening here, and the uncertainty is very high. So why am I going to go pay nosebleed valuations for anything here right now? I mean, the risk factors here in this market are super high. Is there an AI efficiency trade that's going to take us to new highs? Yes, maybe there is. Maybe that's this Trini report was saying later this year, perhaps new highs, and then the tank afterwards. But I just we're at a certain point here where AI is going to change the world, and we just don't know if it's for the better or worse. That's where all the questions come from. So we could keep talking about the war, and once the war gets over, everything's going to be just fine. Is it though? That's the question mark. So I actually was doing some de-risking yesterday. I did some de-risking, raised a little bit more cash just for the uncertainty because I've been pretty fully invested. But we had a beautiful bounce yesterday. A lot of stocks up substantially yesterday. We had a great trade. We can get to that in a second. DXYZ, which we were talking about as a SpaceX. We'll get to that in a second.
Okay.
I think we just need to understand the market environment that we're in is very uncertain. There's another disruption here today. Chat, informing us. AppLovin, it's down 7%. Meta. So we're talking Midwest Boutique comments circulated early, noting this is from Street Insider. Thank you, Street Insider. Circulated early this morning that Meta is working to compete more directly with AppLovin, even though checks indicate that AppLovin has this very strong competitive moat. Buffer its own reporting, noting APP is unlikely to give up market share due to strength of max mediation tools. Okay. Either way, any type of disruption, we see it here again. AppLovin down 7.5%. The market is spooked by any type of disruption. As small as, maybe even TurboQuant was with Micron and SanDisk yesterday, any type of disruption, this market is very spooked on. So AppLovin is getting hit here this morning too. It's like again and again, we keep seeing the same things happening. We wake up, there's a little bit of war talk, escalation or de-escalation, but there seems to always be a disruption every other day that's happening. So we get another one here today. Where are we heading? Again, nobody has the answer to that question. I wish I did. I wish I had the crystal ball to tell you AI is going to be the best thing ever. We're going to expand out into other places, and jobs are going to be created from nothing, and it's just going to be unbelievable. That's the optimism. The pessimism says AI is going to replace all our human jobs. That's a scary thought too. So I don't know. I think the true answer probably lies somewhere in the middle of that, but the market doesn't know either. So that's one thing to consider, is that this market was weak before the war started. This market was already rolling over in a lot of names before the war started. The masses, the media will blame the war for all this, especially, it's a political thing. Midterms are coming. Obviously, you get into the politics of it. They're going to blame this market sell-off on the war for sure. And it's definitely had a negative impact for sure. But the market was already weak coming into the war. Absolutely. And it was weak because of potential disruption. So this is something that's not going away. The war eventually they'll get settled. They'll have, some type of talks. They'll figure it out. AI disruption is going to continue and is going to accelerate. So there's going to be winners and there's going to be clear losers. Microsoft goes down every day. Every day I wake up, Microsoft is red. It's just one-way track, making new 52-week lows again, trading at a valuation we haven't seen in 25 years. It's now trading 19 times forward earnings. This is probably the best software company in the world, but it is software. It says Microsoft in the name. It could potentially be, Mr. DeSoto, I see your message there. It could potentially be a great buying opportunity. It very well could. Maybe Microsoft figures it out. I mean, hell, they were the ones that started this thing with ChatGPT for the most part, with OpenAI and Sam Altman.
If someone's going to
So
figure it out,
maybe if someone's going to figure out, it's maybe going to be Microsoft. Do I want to make that bet though? I
Not
tell
right
you,
now.
everybody who's made that bet in the last 2 months is getting hammered. It continues to go down. So where does it turn? Where does this ride turn? Nobody has the answer to those questions. This is the market that maybe for the first time in our lives, this is the market where actually nobody knows. Not even one person. I always say nobody knows anything. They really don't here. They really don't. But we can put pictures, pieces of the puzzle together and say, man, I can see what OpenClaw can do. I can see that, Anthropic's coming up with a new update to Claude and its tools every single day. I could see that people who have no programming experience are creating software from just talking. I mean, this is unbelievable advancement. So that the technological advancement with 100% certainty is going to be unbelievable. The question is, does it benefit humans or not? That's the biggest question.
Chat, give us the answer. A buddy was highlighting.
Everybody will have an answer,
and
but I don't
like,
know if anybody knows.
The acceleration, Dennis, is of course the thing to focus on here. Like, why do you want to be a hero in this market? This is just not the market to be a hero in. Buddy was highlighting to me the other day how Elon was recently saying how he goes to bed and he sees an update on LLMs and what agents can do, and then he wakes up and he says there's already like a double advancement from when he went to bed, a few hours earlier. That's kind of where we're at right now as far as this stuff is going. And here's the silver lining, folks.
Please,
we're all gonna get to figure this out together. At least we're together.
Exciting.
At least we're here together.
And we get to ride this ride. And the advancements that you're going to see are going to be incredible. It's going to be so much fun to see what AI can do. Like, you're going to be blown away. Like, next year, it's going to be like every day we're blown away. We're blown away. And they talk about the singularity. Musk has talked about the singularity. And what is that? It's when the human brain can't process the advancements because they're coming too quickly. Think about that, and this is the best analogy. I saw somebody use the iPhone as the best analogy. I maybe gave this like a year ago, but the best analogy might just be this, that, imagine your iPhone. It comes out once a year. It's going to have a better camera. It's maybe going to have a little, better, storage. There's going to have a few things going to work a little bit better. Siri probably not, because they never fix Siri.
Poor Siri.
But, you kind of can predict what the advancements are going to be. When AI starts building iPhones and AI, is going, it can do it quicker and quicker and quicker. So your new iPhone doesn't come out every year. A new one comes out at update, every 6 months, every 3 months, every 2 months, every 1 month,
Whoa.
Every month, every week, every day,
how is
every
that impossible?
hour, every minute, every second, because AI is working exponentially faster than we can think. Every millisecond, you get a new update. That's a singularity, where the updates are coming so quickly that we can't process the speed. We can't process what the new technology is anymore. That's where AI will eventually get to. The question is when, not if. The question is when. So these are all like question marks for how do humans fit into this? How do we fit into this when AI eventually gets smarter than us, which Elon Musk predicts by the end of the year? Is Elon Musk right? His timelines are always wrong. So who knows? But
what if his timeline
probably eventually going to be smarter than us? Elon Musk has also said that he believes that AI will be smarter than every single human being combined by the end of next year. Well, there's a scary thought. 8 billion minds all working together simultaneously and at the speed of light.
Triple
This is
D.
all fascinating stuff. Everybody says nonsense. You could stick your head down in the sand. It's okay. You can. And just say, no, none of this is going to change. I tried ChatGPT 2 years ago, and it gave me the wrong answer. This stuff doesn't work at all. Dumb. Just dumb. Maybe But you know what? If you try it today, you go actually paid for the real paid subscription, and you try these things, you'll find out that it's giving you a lot of the right answers. And you'll find out that it's giving you pretty efficient. And you find out that it can actually build things now. We've gone a long ways in 2 years, folks. Give it another try.
Side note, when Dennis does his like trader investor persona voices, it's one of my favorite parts about being on pre-market prep.
I mean, Amados, AI is still in its infancy. AI is like still in the womb. It's not just in its infancy. It's hardly been born yet. Like, we are so early. We're not in the second inning or the third inning. We're still in the first pitch of the first inning. It's going to be mind-blowing. So that's exciting. That's the exciting part. But what does this mean for stocks? Because that's why you're here today.
Stocks.
What do we buy? What do we make money in? Where is the money? Denny, show me the money. That's what you guys are here for. And I wish I could have the crystal ball and say, yeah, this is what you buy. I'm making bets. AMD, Nvidia. I mean, hardware spooked me yesterday, but I'm still making bets on a lot of, AI names, Marvell Technologies, buying stuff. Not software, I haven't been. Will I eventually get into software? Maybe. Could I get talked into Microsoft? Maybe, but it's got to show me something. Show me a reason to be a hero and call the bottom on this. We can trade anything. As traders, you can trade anything. And that's the lovely thing about trading. None of this matters if your time horizon is the next day or the next hour or the next couple of minutes. But it matters to you long-term investors, because some of us, including me, are trying to build a long-term portfolio to benefit from the AI movement over the next 5 years. I've built a barbell where I've got a lot of AI stocks and I have some bonds. And that hasn't been working well in the last month. It's been a terrible month in my long-term portfolio. It's been dinged hard. I'm down 12%, or maybe it's 11% now because I had a good trade in DXYZ yesterday. But I mean, still significantly off. Trading account is at an all-time high. My month was fantastic in the trading account. That's different. We're in and out. We're doing trades. And let's go talk about some of this stuff, because this was a long conversation on AI. But I mean, the SpaceX thing is exciting. The SpaceX has, a lot of people excited, and it has these private companies like VCX exploding up the last couple days. So VCX explodes from $30 a week ago to over $575 yesterday. Those are incredible moves. It has 5% SpaceX and everybody's going nuts. Well, DXYZ, which, we talked about in the STN think tank and took positions long in it, has 16% SpaceX. 16%. Now, I already sold too early. I sold yesterday on the big pop. But I mean, 25 to 33 in 2 days, it's a hell of a move. Now, we're in a bear market where you want to take your gains when the market takes them from you. So we have to consider that in all context. But, it's exciting. So you have some of these different ways to potentially play the SpaceX. Now, it could be squashed, and maybe Musk says, no, I'm not doing an IPO this year. All these stocks would tank. But rumors are, it came from the information, that a SpaceX IPO could be announced as soon as next week. And that's what ignited all of these stocks. So you have DXYZ, VCX, Robinhood Ventures. I don't know if they own it, but it started going to RVI with a new spinoff from Robinhood. And that stock exploded yesterday too, going from 26 to 32. These companies that invest in private companies, some of them own Anthropic as well, have been exploding in price. So that's why I had DXYZ originally, was because it has, indirect exposure to Anthropic. So I was like, and I believe in Anthropic because I can see what Claude can do.
What is, XOVR? You got this one.
This also has a small
What's
position in SpaceX. This also owns public companies, though. It has a huge position in NVIDIA and all the other ones as well.
What's the significance of, why did you just warn us of that?
Because that's trading not just on private valuations, that's trading on the stock market. Like, you can have high frequency traders coming in and saying, hey, 95% of their holdings are public companies. We can see that all those are going down here today. So that's what holds it down. So it's unlikely to have that explosion in price that a VCX, that a DXYZ, because there's no public holdings. There's no stocks. There's all private companies in there. So you don't see the destruction. The high frequency traders can add up the destruction in the stock like XOVR, and it's not going to live. But it does have exposure. So we're just trying to tell you companies that have exposure to SpaceX. I don't know if this is 100% accurate. I use Gemini. Obviously, we can have mistakes. We're saying, we're not saying AI is perfect, but it's getting the answer right a lot of times. RONB is another one. You're bringing these up, which has some SpaceX exposure, also owns stocks. And AGIX is another one as well. Has some SpaceX exposure, but again, also owns stocks, so it's probably going to be down. The ones, that really took off yesterday, those three that I said, though, VCX, DXYZ, and RVI, Robinhood's Ventures Fund. It's exciting. It's fun. It's fun to hear about IPOs. It's fun to hear about something positive because this market's been so negative, even myself, negative included. But, just caution is what it is.
And Michael Feehan in the background, can you give us a little banner of the 1, 2, 3, 4, 5, 6 tickers that we just went through? Oh, he's got them ready. DXYZ, just to review here real quick. DXYZ, VCX have been the two that we know have exposure and have been moving. The RVI, the XOVR, the RONB, and AGIX, those are kind of more like, okay, we know these companies, these issues have exposure to private. That's kind of more the theme there. We don't have confirmation that RVI, XOVR, RONB, or AGIX have direct exposure to SpaceX. Correct?
So somebody in the chat say they don't own SpaceX. People will get you on the technicality here. They own a special purpose vehicle that owns SpaceX. They have indirect exposure to SpaceX. They do these in, some of these private companies do it in different ways. They have exposure to SpaceX. It's indirect, but it is there. So they own a special purpose vehicle that then owns SpaceX through that special purpose vehicle.
This is for DXYZ, correct?
Yes. A lot of them do it this way. Anthropic is the same way. A special purpose vehicle that owns Anthropic. So they're doing them in different ways.
VCX is the one that does have direct exposure to SpaceX.
I didn't research that far, but I can look into it. But I mean, either way, these companies have exposure. So you got people who want to hold me on a technicality here. That's how it is. Like I say something and they're like, Dennis is wrong. Dennis is wrong. He's an idiot. Don't ever listen to him again. It's indirect exposure. It is there. I made the money because of this. P&L speaks for itself. People hate it when I say that, but I mean, right or wrong, the market will tell you whether you're right or wrong. DXYZ went from 25 to 34 yesterday because it has that indirect exposure to SpaceX. There's no other reason. The information came out the report. Boom. It wasn't like, all of a sudden it was Anthropic news. Day before was a little bit of Anthropic news. But all these stocks were moving yesterday because of the potential of a SpaceX. If we get actual like SpaceX IPO filing, these stocks all likely explode. So what we're doing is setting you up for success, giving you a list of stocks that have exposure. This is what trading is all about. When you get down into it, creating lists, knowing which stocks will go if this happens. If we get SpaceX announcing an IPO next week, all of these stocks that I just listed are going to lift. Now, the three public ones are not going to lift as much, but the ones that are really going to go VCX, RVI, and DXYZ. That doesn't mean we just come and buy them today, but we want to be ready for this information. They've already had a lift. VCX is crazy, man. So VCX NAV is like $18.50. It's trading at $430. That one's nuts. I would not touch that one with a 10-foot pole. Things trades in 15-point spreads. That one's nuts. DXYZ is more reasonable. Its NAV last time we looked was $19.90. So at 25, it wasn't as bad. That's why I made the pitch, because not only do they have indirect exposure to SpaceX, but Anthropic as well. So I kind of like both those companies there. That's why we were buying DXYZ last week. We got rewarded with the rumors from the information about this potential SpaceX IPO. We rang the register. I hope it comes back in because I will rebuy it.
And if we were going to see a SpaceX, and we do have jobless claims coming up here in a couple minutes or so,
Sure.
And if we were going to see a SpaceX IPO filing, where would one might find that information, you might be asking yourself right now? As far as I can tell, we will want to tune into the SEC's Edgar website. We're going to be looking for the S1 filing. That is the first IPO filing. When an issue is going to the market, they'll file on the Edgar. You can go to sec.gov/Edgar to search that. Spam that if you want to find the info on when that will be hitting, and you'll see like a prospectus. You'll see like a deck in there. There will be some financials. There'll be some, business units and operations. Will be a lot of good info in there. Jobless claims here. We are expecting
20 seconds away.
Reading of 211,000 jobs for last week. For the last 2 weeks, that's our continuing jobless claims reading. We're going to be expecting jobs around 1.86 million. 5 seconds here until we're going to get our jobless claims data. See if I can pull up a chart really quick. Oh my gosh. Jobless claims, 210,000, right in line versus a 211,000 estimate. Continuing claims coming in at 1.82 million. Economists were looking for 1.86 million. Do we have a little price action on the move, on the news? Not really. I don't know if we were like expecting anything too much here. Also want to make a quick note, kind of odd here. We usually get our BLS, Bureau of Labor Statistics, Friday jobs report on the first Friday of the month. Little rule of thumb there. Well, the first Friday of the month for April is going to be Good Friday. So the stock market will be closed. The stock market doesn't observe or celebrate
Are they still going to give us that number on the Friday? Are they going to move it?
Yeah, we looked yesterday, and yes, they are still going to give us the number on the Friday. Dennis and I were talking like, oh, they're going to probably reschedule it to Thursday or maybe the next Friday. As of right now, I looked on the BLS yesterday afternoon. The BLS said that data point is going to be out on Friday. It has not been revised yet. We will tune in to see if it is revised, but as of now, we will get our our non-farm and our private sector and our unemployment reading on Friday. I believe it's happened one time before. I think in the last like 15 years, I think we've seen where we've gotten our jobs report on a day that the market has been closed. So we'll figure it out. We'll have to tune in. Maybe we'll have a little session to just get the data, but markets will be closed on next Friday for the Good Friday holiday.
Okay, so we've leaked a little bit here on the S&Ps. We continue to leak here. What's going to pop this market? The next Trump truth, where he comes out and he can't handle it anymore, and he's going to say, "I can't take it." I'm going to just tweet something out here, choose something out, say, "Oh yeah, we got somewhere today. more of a deal." Those deal pops are not holding at all, though, because the market is calling the bluff. The market is not believing, that there's, the deals are being talked here. They're hearing both sides here now. So the truth pops are being sold. So it needs to, either actually make a deal, not just talking about it. Like we were saying before, talking about a deal was popping the market before. We need more than just talking about a deal now. We actually need a deal. So this market probably stays depressed as long as there is no actual deal. Now, if Iran comes on the other side and says, okay, yeah, we're willing to talk here now, that's going to be a big pop in the S&P. So if you are short, you have headline risk galore. I think more headline risk to the upside than the downside. I think you get the steady leak, but I think there's just so much headline risk. It's a scary market to be short because there's so much headline risk to the upside here, where it's just random Trump. And we know the Trump put is below. We know he wants to defend the stock market. He will think of something to defend the stock market. And he doesn't like watching oil today. He's mad today. He's woke up. He's already angry. He's yelled at NATO. He's yelling, but that Iran better do something or else. He's mad. He looks at the market and he's mad. So that's going to be, what can I do about this? I'm sure he's trying to think of something to try to get the markets to pop back up. So keep that in mind if you are short.
Let's go to one of our favorite STN guests, Tommy Lackey from Relativity Capital. Here we go. Let's get Tommy. Good morning, Tommy. Oh you
no.
Are. All right, I turned it on now.
There we go.
He's got it. He's got it. He's just fooling with us. He was just playing with us. Work day.
No, I wish I was. I never can remember which one's on and off. I don't use it enough.
How you doing today, Tommy?
Doing great. How about you guys?
Hanging in
choppy.
there.
Yes.
We're choppy. We're trying to figure out. I feel like, I'm running around chicken his head cut off. It's, we're going way up. Oh, we're down. Oh, we're up. Oh, we're down. So I want to talk to Tommy, who is very good at cutting out the noise and just like looks here and say, well, what's happening overall here? So we want to get some Tommy Lackey charts here up here. You're in the STN room all the time with us, and we appreciate that so much. We haven't been on pre-market prep in a while, so let's, tell everybody, what you're seeing here in the markets, Tommy.
All right. I mean, honestly, it's just like you said, it's just chopping around, trying to find its way at the moment. And basically, I think a lot of people are trying to spend a good amount of energy trying to find a bottom. And I think maybe we're just not there yet as far as time to find a bottom. It doesn't mean that we're not putting in a bottom, but the whole thing is trying to find one just takes so much energy. You're better off continuing to stay on top of what's working, and whether you're invested in it or not, and stay on top of the areas, the names that you like the most that maybe are getting beat up, and trying to see if they start showing a change in character. And changing characters, like with anything else with technicals or anything else with charting, is it's a matter of your time frame. You can find a changing character on a 15-minute time frame. Just don't think it's going to last 6 weeks. You got to move up time frame. Now you can start on a lower time frame like that and then move up time frames if it works in your advantage. But you can't figure out, you can't forget the basically the play field that you entered. You're not entering a long term on an intraday chart like that. So right now, if you're trying to enter on daily or weekly charts, I'm not sure exactly what you're looking at, because the overall market and all that is not giving you a huge signal. Now, again, I'm not the one to say that I don't ever buy in situations like this, because I have no problem with my clients' portfolios breaking, like if they have new money or something like that, and it's already a position I've held for a long time, and I know I'm going to continue to hold it, I'll break it into 3 or 4 little bites, and I'll take a bite here and there when we see some of these positives. It doesn't have to be the bottom. It's an industry I feel still has strength. It's just right now there's not much in favor unless you're in basically the things like the space stuff, the energy stuff, some of that, which luckily I have some of that. And so that helps.
Nice.
But that's kind of the big scenario you run into. Actually, UFO is one of the ETFs that I've had in our situation for quite a while. I'll put it up on my screen and change it to one chart so you're not looking at trying to look at 6 at one time. Obviously a nice day yesterday. Is this is this chart running? No, but man, that's a pretty chart for what we're sitting in right now.
What is this one, Tommy? UFO?
It's UFO. It's an ETF, and it's basically the Procure Space ETF. So obviously it's playing on the SpaceX headlines, but look at it prior to that. It's not like yesterday was the first day that it had been outperforming these markets recently.
Yeah.
So there's things like that. And that's what I always try to explain to people. Like the way I manage my clients' portfolios, I may trade some stuff myself more aggressively, but the way I manage my client portfolios is I have a lot of stuff in the same stuff everybody else is in, a diversified portfolio, just trying to make sure I stay in the right asset classes and sizing and things like that. But then I have the explore portion to where basically I just try to rotate in and out of sector and theme ETFs these days. And so this is kind of a wonderful way to do it. Now, again, right now, because I did also and do believe that there should be some bottoming action in software, I'm holding it right now painfully, but not in a huge position. All these are small, teeny positions to where something like this, when they work well, and you can double the money, and you can take a 2% position up to 6 or 8%, and then that's a 5% gain in that year if it doubles or things like that, which doesn't always happen, but themes have a much better chance of doing that than diversified fund. When they get hot and they get in space, you can do that over a year or 2 years. So that's kind of the way I look at that is, there are places you can still invest. This one, my opinion is this is something that looks like it could be entered now, even after a huge day yesterday.
Like it actually, when you're looking at the chart, and it's always nice to lift up the hood and see what's in UFO. Planet Labs, one holding PL, which we know has monster stock. But then you've got a lot of the Rocket Labs, the ASTS, SATS. A lot of these companies that definitely got a lot of interest yesterday from the rumors of the SpaceX. Rocket
exactly.
Labs. Yep.
And that's why I picked the fund before when I picked it. Why is this not coming up? There we go. When I picked it, it's because of what you just said. It wasn't just the largest, defense companies, things like that people would be thinking of in those scenarios. This one has, and that's like you said, it's always good to look under the hood. And I've been caught off guard here and there, but it's like, I always try to find these areas, like another one, which is it's pulled back, but we'll stay on FinViz for a minute. But another one that I'm still like a lot from the theme and all that is this Robo, which is a robotics and automation. And again, I like this one because I own NVIDIA. I own these things in other funds. So when I go to robotics, I look here and it's basically almost pretty much an equal weighted 78 holdings, and the biggest holdings 1.9% with Teradyne. So this is going to get you, if it really is the kind of explosive sector that we think it can be over the next year or two, this allows you a way to not be just in NVIDIA and just the big names, but also have a piece there that any one of these small ones could double, triple, or more. It has some of the photonics in here, things like that. So really gives a good spread of a lot of the different hot areas at this point.
Yeah, you've got some international in there too. Fuji Corporation's a huge Japanese manufacturer, robotic assembly, IPG Photonics, Fanuc Corporation, which is another Japanese. We've got a German Genoptic. It's like a lot of companies here that we don't trade every day. So you're getting exposure to some international in here as well.
Correct. And so those are some of the things that I like to do in these kind of theme areas. And again, themes can be shorter, long term. This is more of a longer term thing. I'm just putting small bites in it here and there, like now when it pulls back and looks like it's starting to, turn the corner a little bit for me. I start trying to look for areas to add because see, it just really came back on the weekly to this congestion area. It basically broke out. It's back testing that breakout. So, I could reduce if it goes below about 67.67, and this is on ROBO.
Yeah.
But the fact of the matter is, this is trying to build out a base here in an RSI bull range. And if this weekly does close higher at the end of the week, we also now have a big positive reversal, which is one of the big things Andrew Cardwell taught me to watch for, which is basically when it's the opposite of a divergence, when basically the RSI makes a lower low, but price makes a higher low. It basically means you have underlying buying in that the price is not breaking down the way a lot of people feel like it is, and the uptrend should continue. Again, there's everything. There are places it fails, things like that, but it's a way to look at the markets and look at an indicator like this. Like I've always told you, I use RSI as a trend following, not an oscillator. But this is a way that since it's in a bull range here on the weekly, that gives me a good area of potential entry with low cost if I'm wrong. To basically,
at what point, I want to ask you that, Tommy, because risk management is the name of the game here. I mean, if you're a trader, you've got to have some type of risk management. Maybe longer term investors have a little bit more leeway here because they're investing in good companies, reasonable valuations long term. But I mean, if you're a trader, you absolutely have to have uncle points where I'm saying, okay, look, this didn't work out. I'm out. What's your uncle point here, Tommy? Like when you look, and you're entering a trade here, is it a percentage basis? Is it like a certain spot on the charts? Like where on a thing like Robo, if you were along that, where do you say okay, this trade didn't work out, I'm wrong, I'm going to move on?
Well, again, it depends on where you enter. Here's where I'd be adding. I entered back in here on this original breakout, so I have some cushion. So again, that's going to bring something. If I want it to be a long-term hold, I'm probably going to look for an area in here where I have a congestion area that means something to me. Volume's heavy over here on the left side where it's a previous congestion. So if it could lose this area, that'd probably be my longer term. Hey, we need to take a break, see what's next. And that's mostly going to break down this weekly. Now, again, this is on a weekly time frame. Right here, if we flip down to a daily time frame, again, this piece I added, depending on how it acts, if it immediately failed and it goes down below that 67.71 and closes for a day below there, I can go ahead and take that back off. Because that would tell me that right here where I thought the daily was starting to work its way back up, it's a failure in a bear range. So that means that I just need to be more cautious in that. Again, it's time frame dependent and trade dependent. This is something I want to hold longer term, so I'm going to give it a little bit more leeway, and it's a smaller position to start with because of that. I can add to it as I go. I don't really want to reduce a whole lot at the moment based on how my position is built and structured. But that scenario comes into, you're right, there has to be an uncle. If you're just a trader and you're really just looking to work its way maybe back up to this gap or maybe back up to these highs, then you absolutely need to use somewhere around this area. I'd say 67.50, something like that would be your out. And it needs to be risk reward dependent. It needs to be, and that's where I said in kind of the notes I sent y'all, care less about finding the bottom, care more about planning. Spend more time planning. And that's what this is this trying to plan based on the trade you're looking at in front of you. I don't really want a specific percentage. I don't want a specific that. I'll calculate that number on where I think it's going to be. But all I'm going to do from there is either increase or decrease my position sizing because of what that loss parameter is. So the chart really dictates where it's logical for me to get out. And then I'll back my position size into that.
I wanted to ask you about that care less, plan more comment, and you brought it up anyway, which is awesome. But can you maybe give us another little example here where you might be trying to set up in that way?
Well, I think its example in general is that part of the plan more doesn't mean planning a specific trade. It could mean just doing more screening. Again, let's be
Sure.
realistic and doing screening every day. One of the things I try to explain and why I think most of our industry where people actually manage money for people fails a lot is that so many advisors and RAs have to be out there working with clients all the time. They just don't really sit in front of the markets. And when they sit in front of the markets, they feel like there's something they have to do. And I get that feeling some too. We all do. We all have a difficulty being patient and not acting. But that's really the thing I try to get myself better and better at every day. Not always perfect, but is that just being able to sit here and do nothing doesn't mean I didn't do anything for the day.
Yeah.
And I think that's the part that's really, really hard to get in our heads, because most traders are very, I won't say A-type, but very much want to win. They want to succeed. They want to push forward. They want to get better. They want all of these things. And even with myself, I still struggle with it. I promise you guys, I'm not trying to say that I've figured anything out. It's the idea of trying to not only convince myself, but also convince my clients. Me sitting here all day watching and not doing anything is doing something.
You're
Especially
learning,
as I
you're
build the
researching.
knowledge. Exactly. As I build the knowledge, as
Yep.
I see what's there, as I see what might work when things do turn. It's one of those things to where there's two sides to a correction. And let's be realistic, we don't always get out before the correction the way we'd like to. But if we keep our head in the game and we pay attention and we can find close to the term, a lot of times we can make adjustments with relative strength that help make up just as much as if we had pulled a lot out on the downside. Again, hopefully you can do both. But we're human, and a lot of times it doesn't work that way. So don't give up. Go back and say, okay, this side of it's done. Now I need to start working and figuring out how I'm going to work this side when it comes back. And it's just it's always going to happen. The question is when. So the planning part is not just looking for sectors, looking for relative strength. I mean, one of the things here, you can go right in here and I can look at, okay, what groups? And just look at group charts, and then I can dig down later if I want to. But, in a situation like this, it's like, okay, who's going from bottom left to top right?
All of those.
Yep.
A lot of these, and some of them feel too extended, which I can't disagree with. But it's like, okay, well, let's look back down and see, do I find some patterns in here I might want to dig deeper on here? Like right here, automobiles and components. I kind of like it because it looks like you have a nice let's see if it'll bring me up a bigger chart. It looks like you've got a nice base here for quite a while, and this is a weekly chart that's now coming down to for the second time, and we've got a weekly pattern that looks like it wants to reverse higher. It's worth watching. Look at the stocks inside there. Dig down a little deeper and see who's there. Obviously, Tesla looked great yesterday compared to a lot of things.
Sure.
And you need to be deciding things like that. And then you need to be deciding, okay, do I want something that's big like this? Am I looking for the biggest stuff? When I was on y'all's show on Tuesday, I talked about the potential of Tesla bottoming. We don't know if it has or not. Right now, it looks like it's getting rejected at these lows this morning, which isn't a great sign, but it's early in the morning. Let's not give up just yet. And so we're looking at patterns like this, but you don't have to just be in that pattern. There's other things out there that are, shaping up. I found this one this morning, which is basically strategic education, STRA, that looked like it was basically in the top of this bottoming base. And we're looking at this volume footprint down here on the bottom right after earnings and after dividend. It looks like it wants to try to move higher. Now, you may or may not want to trade something like that. But again, you got to that's part of your planning is seeing what's out there that's actually doing well and actually shaping up. I pulled up, I think it was about 14 tickers this morning on a quick scan. ARMK. I mean, this is restaurants. This is not tech. This is not whatever, but that looks like it's setting up a flag here and inside this little basing action. And again, all this happening, on what looked like here a failed breakdown. They gapped right back up. So it depends on whether you're stuck to a specific sector or industry, or whether you're looking for something to trade that is going up. And so again, all these are decisions that are in your planning. For myself, I might be trading a few things short term that are off this list, but for my clients, I'm looking a lot more into, what is structuring, what is like UFO, like some of these other things, what are holding up the best and looking like they can work positively. I have a little bit of energy, but most of my energy is more pipeline, and I did it more for the dividend than I did it for the growth. But hey, it's working. So it's a matter of just looking at these different areas. Another one that held up very well for me is PBW, clean energy. One of my themes right now is that we need all the energy we can get from every source available.
Yeah.
So I have probably almost as much energy in my portfolio as I do have technology, and not just oil, but I have like a utility thing. I have uranium. I have this PBW. I have TAN for solar, small piece of all these, because all of them look to me like they are holding pretty well for as I've known them to trade in the past. TAN was a leader yesterday. And again, that's not a horrible chart at all. When you look at it,
like you said, we need, one thing we can see is we're going to need more energy. If AI is going to continue to build, is it there? Sometimes you just got to think fundamentally through it, and like energy is probably something that's going to continue to be in demand. So then when you find the charts that actually look good, I mean, like you said, TAN, and I mean, even if you left on the, you look for solar, it's been kind of in a downtrend, giving it back here a little bit. But some of the left for dead ones, even like a Solar Edge, which, was just destroyed for a long time, is starting to show life. I mean, here we are in the toughest state possible, but, maybe this energy demand is spreading into solar here, because Solar Edge is sitting right near its 52-week high.
Yeah. And you're looking right here at in phase, which was one of the most beat up. One of the strength in the area is NXT. I mean, look at that chart. Wow. I mean, it did all this while everybody is just literally throwing the baby out with the bathwater. And again,
NXT is approaching a new all-time high here.
Yes.
I mean, there's not a lot of stocks doing that. Is it that simple? We just run scans and look at stocks that are trading at 52-week highs right now and saying,
no,
not that simple. Okay.
No, it absolutely isn't. NXT very likely today could basically kick you right in the teeth and head back down to, 110, 109, somewhere in that, and just make everybody mad. And then you have to decide whether you were able to play it well enough that you're going to give it another shot, or you're going to hold through that. And again, that's position sizing. That's what are you trying to do here? Are you trying to just get the breakout and the quick run?
Yeah.
Or do you think this is something you want to try to, Sunrise Trader on Twitter is one of the best out there. He is a phenomenal just person and all that. But one of the things he always talks about, which I still hadn't, he tells it and you can go through his feed and find it, but like he sets up to where he buys an oversized position of everything. And then he has what he calls his payday shares that as soon as it runs a little bit, he takes some of that off and gives them some cushion. Then he'll have his full, and then eventually he sells that, and he has his what he calls let it ride shares. As it gets more and more gains, he moves some of them over into this other basket. So it's intricate. It has some complexity, but really simple when you think about his goal of never letting something that's green turn red.
It's just an exit strategy. I mean, so many, even me, like we all have entries, we all have like, oh, that's a nice setup, I want to buy that. But so many people, including myself sometimes, like, what's the exit strategy here? Because it's not as easy. The exits are hard.
Correct. And especially when you're someone like me who's not hard target oriented. I'm not hard target oriented. Remember, I do milestones. So if it gets up there and it works that and it keeps going, I'm trying not to sell it at it. I might sell a piece, but I'm not trying not to have to unload it all. The camera's going crazy. So from that stance, I'm just in that position to where, yes, sometimes I'll give back more gains than I want. And that is mentally tough. I've had to learn to live with it. I've had to learn to, but that's also what leads to, like the first time I bought TAN, it was 280% in 9 months because I didn't just sell every time it hit another little target, and it ran all year long. And so those are the kind of things that you got to factor in. And with clients, of course, they want you selling less and want you to hold as long as you can. So there's always that battle between when do I take and when do I not? And I let them know I don't really play the tax game a whole lot, because I believe more people have lost portfolios being tax hostage than they have holding on to something, or selling something early and paying the capital gains in it. So I'm not a believer in that. You can certainly overtrade, but I'm a believer in, protecting things and making sure that when you do have something good, you try to take some profits. Again, stinks when it doesn't work, and it still happens to me. I'll ride some stuff all the way up and all the way down, and I hate it. And I'd love to say I got over that in my 20s.
Yeah.
But I think when it comes to trading, you never get over it, because there's always something that'll slip in or out here and there. You try to put enough definition in that it happens very little or it almost never happens. But when you're a discretionary trader, things slip in. It's gonna happen depending on the market situation you're in. So it's just, number one, don't beat yourself to death. Stay focused on, and that's where the planning comes in, trying to continue to look at what you're focusing on. Be smart. When things aren't working, go smaller. I think when things are working is when you do go bigger. But as soon as they stop working, you go smaller. Get your mindset back into it, because your mind is 95% of it. Only 5% of it is your actual technical attributes when it really comes down to it.
Great little summary there, Tommy. To end the segment, you can find him on X at GT Lackey. He joins us in the STN room every other Tuesday. We always appreciate the perspective. Like watching you use the charts too. Nice little chart setup you got there. Thank you, Tommy, as always, for joining us.
Absolutely. Thanks, everybody. Good luck this week. And just, again, hang in there. Make sure you protect yourself, but also be ready if this thing turns, because it's acting like it wants to. We just have to get good news to last more than 20 or 30 minutes.
There you go. Thanks, Tommy.
All right,
thanks, guys.
Thank you. Let's hit a couple ratings real quick.
Sure.
Triple D, we got a few minutes. I'll let you pick us the first rating, Triple D.
Oh, first one is a chase, and it's Needham upgrading ARM to buy. Also, Deutsche Bank raising their price target on ARM as well. I got a little bit of color from the note. They say bold bets are transforming the company. This is from the Needham note. They upgrade the shares to buy, set a $200 price target, arguing that a string of aggressive strategic moves is beginning to pay off just as demand for AI-focused CPUs accelerates. So we had, obviously, the news yesterday. We talked about, them having, what was it, their
25 billion in sales kind of thing?
Yeah. The
over
number,
the next 5 years. Yep.
Yeah. And obviously that was, I don't know, it was 15 or 25 or what it was, but, that was the catalyst that really kickstarted this rally yesterday. And it held up really well. I mean, overall, the market, kind of leaked gains. This morning, stock obviously trading higher here in a rough tape. So you can tell it wants to go higher. Valuation is always kind of scary. So maybe they're trying to throw out some big numbers here to try to get us, a little bit more excited about it. But I mean, 100 to 110, 120 had great support. Now it's just gone. So we have two things happening. The obviously ARM is, behind AI here. So it's in the right space. It's what's moving. It's what the market wants here. It's not being disrupted, at least not yet. So far, so good. The rating itself is a chase. So I'll just give it a C because they're chasing.
C for chase and C for evaluation also. Next one, Nucor getting an upgrade at UBS, upgraded from neutral to buy. A little color here. We got a $190 price target. The recent excessive correction in Nucor shares presents a buying opportunity as UBS thinks U.S. steel producers are, quote, largely insulated from the Middle East conflict. UBS likes the setup for Nucor given little direct hit from energy and project growth in federally supported higher price volume environment. Thoughts on this rating, Triple D, but what about just like the steel space in general in this environment?
Yeah, and it's interesting. Nucor, I've always felt is best of breed. The PE is 21. Forward PE is actually down at 14 on this thing. So whether they hit those numbers or not is always to be determined here. But I mean, still, I think it's the right place to be. I think the industry's good. I kind of like this upgrade here. It's actually a stock that I owned for a very long time. I sold it. I actually wouldn't mind getting back into this. So this intrigues me. I don't know if we're in the market environment for it or not yet. I mean, I don't love that the S&Ps are hanging out near the lows. I don't love there's a lot of heavy weight here. I don't love really, that this war doesn't seem as easy to end as Trump would like it to end. So there are some short-term concerns here. Longer-term time horizon, do I think steel is a place to invest in? I do. And I think Nucor is, valuation's reasonable. 1.34% dividends, nothing crazy. But I mean, I think it's okay. I think it's okay. It's something that I'd consider. I just don't know if the timing's right.
Would you give it an I for intrigue? The rating?
Sure. Yeah, we got these Joel rating systems, not A, B, C, D, and F anymore. It's like, all the letters of the alphabet we use. We have to figure out how to use X, but we'll figure it out.
Quick heads up here. We do have 1, 2, 3 or 4, 5 even maybe Fed speakers today, including the Fed governor and also the vice Fed chair. They are later. They're like this afternoon. Also, a little heads up. We have the Ciena, CIEN, annual shareholder meeting expected around 3 p.m. Usually we don't target shareholder meetings for like potential catalysts for a stock, but given that Ciena is an optical name and this is kind of one of the trendier spaces, want to just make sure to get that on your radar here for a little bit later, folks. Tomorrow on Pre-Market Prep, our special guest on a lot of Fridays, Tony Pollock from Real Life Trading, coach and owner. We'll go through, see how Tony's been thinking about the market, and we'll get a few tickers from the chat. We love watching Tony draw on those wonderful charts. Good to wrap here for this Thursday Pre-Market Prep episode, Triple D.
Yeah, we are. Again, I'm just, you're glued to your truth news wire here, and I would imagine he's going to say something to prop the markets back up. If he doesn't, the markets probably continue to leak. So that's been the trend. It's like constant leak down until we get a truth, and then we pop back up again. And then we leak. So we have constant pressure on this market. You can tell there's just some institutional money managers are just selling constantly. And get the pop, but it's just constantly. And then we get a truth and we pop again. So it's been the story is like leak, pop, leak, pop, leak, pop. So I think that trend continues. So again, if you're trading, you got to be watching the headlines here because they matter. They are building the charts.
All right, chat, we're going to wrap it here for today. Hope everyone has a good morning, a good afternoon, good luck out there, and we'll see you bright and early on Pre-Market Prep tomorrow for Friday.